rapidly before 2030. I think this is not a decades away type of play. It's actually Google's Willow breakthrough showed me that's going to happen within 5 years. And I do think it's going to transition from somewhat of a niche use case to widespread adoption a lot quicker than most people anticipate, including Jensen. And also, like, if you're Jensen, let's just put the tin hat on why would Jensen say that comment. Quantum was getting a lot of spotlight recently, like a ton. I fully think that video will become a quantum play due to that virtual playground that they can provide from trying the GPUs before you transition them to the physical QPUs. But it was taking a lot of the air out of the AI aura, tech, essentially. And I think that's maybe somewhat of a chess move on Jensen of like trying to hit that bubble a bit and refocus all the energy on AI when I think both themes can go on like strong together, but I can see maybe the tin hat view of like he wants to deflate this a bit so all eyes come back to AI. But that's just my 2 cents. Either way, I think if you look at the chart on IonQ, like it's it's way overextended. All the names are overextended, and I put a post on my Twitter this morning on the levels that I feel comfortable adding potentially, and even then, like there's a 21 EMA week EMA, which is at $28, $29. Like that's still a ways to go. That's like a 30% downward move still. And then I really would add probably towards 19, which is the average VWAP from the May 2023 breakout. And I would pound the table at $16, which is a massive volume shelf, and also the 50 week SMA. So I think that if we're going to get this pullback accelerated, especially in the markets like dipping 10-year yields at 4.7%, I think there's more room for blood, but that's okay. Like it really is okay. This is not a short-term trade. It's just not just like I just want to own for a year. Like quantum is going to be disruptive in society, enterprises for decades. I don't know when that's going to occur, but you have to ask yourself which companies will benefit from that and who will be the first mover advantage leader. IonQ is one of those. So there's going to be volatility. It's the toll you have to pay to get on the pathway, on the highway of something as revolutionary as quantum, and you have to be willing to stomach these like massive rug pulls.
I completely frozen.
You a little now. You
Oh,
are a bit of rug.
I'm back.
Yeah, no worries. Yeah. So while Jordan's resetting up to come back on, uh, illustrate on IonQ what other names are pulling back. I mean, I do think that the maybe the play like IonQ is the best pure play quantum name in my opinion. Rigetti is second. I think QUBT, which is a fake company, a beverage company a couple years ago, they were just riding the high tide of quantum. It's not really a quantum play at all. It's a kind of a major fake quantum play. They went up from less than $1 in October to $17. QUBT is the ticker I'm referencing, but so this is one of like this is not a real quantum computing company. This is not, and it's 17x in a matter of like a quarter. This is like where if the air is gonna get deflated from the quantum bubble, this is the name that's gonna experience the most amount of pain because they have no academic breakthrough. There are no actual technical real world applications. You can make the argument there's an R&D stock, research and development on quantum, and even then it's just like it's gonna take such a long time for them just to even get a chance to sit at the table. That this is one of those names where I think it's just gonna if you had to short a name, I'm not it's not financial advice. I don't believe in shorting really. This is a shitco, especially capitalizing on quantum. So like this would be the one to really feel the blood on any kind of pullback.
Stick to
Well,
IonQ then, huh?
yeah, IonQ, Rigetti. I honestly, or Grandpa's quantum picks, Honeywell and IBM and Google. Google is more of like that, mom and dad, but the grandpa one is IBM and Honeywell. So there's multiple tiers, and there's also great private companies. I cannot wait till Quantum is going to go public. But yeah, so that's kind of what I'm seeing right now. Jordan, I don't know if you're lagging a bit. You want
I
to
have no
just?
idea, man. You might have
Oh, it's
to.
working.
Oh, okay, we're good. Well, let's recap a daily rip. If I'm just cutting out, obviously you can take over. But
Yeah.
yeah, let's recap with some. Take a look at the heat map. Is that loaded for
All right.
you?
So you're rugging a bit, so I can take it over as you. Oh, it's loading on slides on me too right now. Jeez. The LA Wi-Fi. It's we're feeling the fires. Let's see. I'm gonna go on my.
Is it up? Oh God, I'm just rugged.
Oh, it's up now. Now, perfect. All right. Heat map. Yesterday was a pretty ugly day, as many of you guys are aware, probably. So I think it's a lot of like a game of hot potato of just like, oh, large cap tech is really driving the market. Oh, large cap tech is driving the market downward, upward. It's just like getting a little nauseating. Hopefully, you guys don't have vertigo because you're feeling pretty nauseous on these kind of wonky moves we're seeing in the market. But I do think that every market has somewhat of a characteristic. This market is tied to the 10-year treasury yield. Like it's at 4.7%. I think it's continue rising and rising, and that's really not a good sign. And I think that as if that continues to rise, the market's not going to be able to rally or bounce back. It won't. It's going to kind of it's breaking some key technical levels. It's not hasn't violated. Let me pull up this SPY. So 581 is a 580 to 581 is a massive level for SPY. We have not violated that yet. That's the 21 week EMA, and that has been the level since whoa, yeah, since that October breakout that we experienced in the market. Like it has not violated that level once. It's retested it 4 or 5 times, but has never violated it. So I think that is the characteristic of this long bull rally is this 21 week EMA. As soon as we touch that, it bounces, especially when there's trillions of dollars in the money funds right now. Like I think are looking to kind of participate in this market. Like there is somewhat of a high floor on any kind of macro pullback because there's just trillions of dollars in money funds. So I think that right now we're at 589. The SPY's pretty flat pre-market. I just I think it's handcuffed or there's ankle weights on the market potentially rising because of the 10-year yield. Like I really have a strong belief that market can't really retest those all-time highs if the 10-year yield's above 4.5%. It's at 4.7, and I feel like we're teetering on like one or two more hot reports or good reports, good strong data reports for this to hit 5%. So I think that if this does hit a five handle, the 10-year yield, we're in some trouble. And I really think that we finally can retest that 200-day SMA for SPY, which has not been touched in, let's see how long it's been. Yeah. Oh, since this rally began, we have not touched the 200-day SMA. That is, I don't know what the statistic is out there, but that is all. Last time we've market's gone 15 months since retesting that massive key technical metric. We haven't touched that yet, and that level is at 555. So like by the time we do hit there, I feel like again that 560 level that I called out, like I think that is the massive bounce area, and I would go really hard at that area because we also have a massive volume shelf at 560. I don't know if we're going to get there because we have earnings season just around the corner in 2 weeks. So we'd have to see some like massive swings downward or sorry, massive swings upward on the 10-year yield to really drive the market down to that 560 level in a matter of like next 2 weeks. I don't know if we're going to do that, get that, especially with the inauguration and Trump's going to have in 12 days. So I think I still feel like 2025 will be a really strong year in the market. So I'm like willing to buy the dip. And I think specifically it's going to be in software names. Like that's where you kind of want your exposure in. 2025 will be an explosive year in software. So when there's any kind of macro driven pullback on the 10-year yield being too high, and it's not really anything fundamental on business spend is in a recession. Um, B2B is struggling. There's nothing about that kind of narrative. It's all based on the bond market and yields. I'm buying the dip. But yeah, today you just saw like, and also Nvidia. What a head fake on Nvidia. That's crazy. Where we just uh, saw it was up 3% pre-market and then down six. I was like
I'm here
nine.
for moral support.
Oh, it works now. It's
If I
better.
cut out, I cut out. All right, I'm here.
Awesome. Yeah, I was just talking Nvidia's 9% intraday swing. I think there's some reasons for this. I believe it wasn't fluff language, but I don't think there's any tangible metrics or he didn't quantify a lot of the future products or roadmap. And it was very 10,000 foot view. It was very TLDR. It really wasn't nitty gritty specifics on quantitative impact on all these like next frontiers products that they announced. Not much commentary on dollars for Blackwell. So I think that caused a little of the vagueness and it created too much noise. And the stock did run up ahead of the CES event. So I think it turned out to be the sell the news event. Most of the time, it is sell the news events when a stock leads up to a catalytic event like CEOs having a keynote speech. But I think I came out of that event bullish on Nvidia. I really believe that Blackwell is going to give them a just as much of an a tailwind as Hopper did, and I do believe that we're getting signs of like what he envisions as the next frontier. Even though he thinks quantum's 15 plus years away, he also highlighted robotics. Like they're very heavy on robotics. He believes that robotics and agentic AI, these two things are going to be really big disruptors for tech in the next couple years. So, what does that say of what stocks are going to be sympathy plays? There's two clear winners of robotics. Two clear, two names. The rest, there's some small mid cap names that capitalize on it. High tide raises all boats situation. But really, there's only two leaders that I'd want exposure in right now. That's Amazon and Tesla. Tesla's Optimus, nobody knows the ceiling on that. And Elon has not failed ever on any of these like early secular growth themes. The only error that Elon has ever made was his timing. He's probably a little aggressive on his timeline on when these are going to hit scale commercially, but he's ended up being right on anything he touches. He is like the messiah of anything growth thematic wise. Amazon, this is going to be a massive margin expansion opportunity for Amazon, especially in their e-commerce business and what they can do in the warehouses. So I do believe that Amazon and Tesla are going to be the two leaders of robotics, and if that narrative builds steam, especially if the air is getting deflated from quantum computing, I think a lot of people maybe are going to take those funds that they've 2, 3, 4x in the matter of past couple months. Where are they going to use those dollars amount for? Whatever the next frontier, next hot topic is for growth. That could be robotics, especially after what Nvidia was saying just yesterday or Monday. Yeah, yesterday. And then everything that Tesla's been doing on the robotics space on their advertising the past couple months, like that feels like a hot theme in 2025. So I think that might be an area. And the yeah, so we can move on to the next one. So real estate. Real estate index fund. It looks like it is violating an area of support and it looks like it's heading lower. I don't know. Real estate's interesting because I think the last earnings report you heard the tone change in the Redfin CEO. I'm blanking on his name, but you can feel how deflated he was. Where the Powell initiated the rate cut cycle, I think it was in September. So he initiated the rate cut cycle back then, and it was supposed to create this floodgates of just like real interest rates going lower, so the demand for houses are going to increase. We haven't really seen that interest rate getting lower and lower. Like it's been stubborn, and I think you're sensing how frustrated a lot of the Zillow management is, Redfin management, a lot of those real estate companies. Like, they're frustrated because they were anticipating like, oh, we're finally gonna end this chapter of what the Fed's been higher for longer interest rates environment. We're gonna start beginning the rate cut cycle, and that's gonna create this euphoria for buying on real estate. That was way off sides. It has not been the case. It's been somewhat alarming on how stubborn the interest rates have been, and it's been it's been a bit delayed than anticipated, and now these real estate companies are kind of sitting on their hands, like, we thought 2025 will be a great year for us because Feds are going to cut rates and it's going to blah blah blah. That hasn't played at all. So I'm not surprised to see this chart, but real estate's an interesting case study. I don't know. The interest rates are just not going lower, even with the Feds cutting rates. It's just not working. Apple, yeah. So 65-minute time frame. Apple is pulling back a bit. I think they had, again. You guys are no, like, I'm a bear on Apple stock, but I'm a bull on Apple company. There's a key difference. Apple has pulled back towards, what was it? It went from 260 to 240, so 8 to 9% correction in the stock. It's not really at that bear official correction of 10%, but you you got to ask yourself, like, on like, what, why has the stock like maintained this run when the reason for this breakout they experienced second half of last year, 2024, yeah, 2024, was near-term monetization of Apple Intelligence. Like, they're gonna start monetizing AI into their ecosystem, and that's gonna be a massive tailwind for a company like Apple, who has so many like devices out there that consumers use, that that's an easy lever for them to pull AI or Apple Intelligence to have some margin expansion opportunity, reacceleration on the top line, increase your cash. Like, they've been a financial engineering company for almost a decade. This was kind of their first like thematic that they can actually capitalize on and monetize. AR and VR was an absolute dud. Absolute dud. That is, they're not going to succeed in that unless they do something drastically different. That's Meta's domain. Like, Meta has owned that. So now they're playing catch up a bit. But Apple Intelligence was supposed to be their gold star. And guess what? Like, I'm severely disappointed in. I have the Apple Intelligence update on my phone. Like, I do not notice a difference at all in my life. It is a mess. Siri is not really helpful. She really hasn't gone that much better with the Apple Intelligence infused into it. So I think the monetization was overhyped for Apple. Maybe it'll happen in the medium term, long term, but in the near term, it is not going to be the tailwind that a lot of people anticipated. And the stock is probably somewhat cross correcting itself a bit on, all right, maybe the monetization is in the near term. We haven't really figured out the Apple Intelligence angle yet. So now it's course correcting. That's really all it is right now. And even then, like, it's their PEG ratios above 3.0. Them and Microsoft are the two Mag 7 names above 3.0. That's Peter Lynch's favorite metric. I love that metric for mature companies as well. PG under 1 is undervalued. PG above 2 is overvalued. Apple is at 3. Microsoft is at 3. That's extremely overvalued. So they're kind of correcting itself. Like, I wouldn't be surprised if you saw Microsoft kind of not consolidate a bit or like struggle. And I feel like Apple's just probably going to consolidate around the 240, 250 level for quite some time, until they can figure out the near-term monetization. So yeah, that's my take on Apple. Jordan wants to try speaking. You look frozen, so I'm gonna. You can butt in whenever, but it looks like you might. Yeah, you're frozen. Yeah, we can move on to the next slide. Coinbase. Let me see what crypto Bitcoin is doing this morning. 95. So crypto is a real. This is also why I'm somewhat bullish on buying the dip on any kind of macro driven pullback in the equity markets, because the risk barometer is crypto, in my opinion. If crypto's holding, which I believe, like, even though it violated 100K, like, it's still holding well at 94, 95. Like, it's not really trying to fill that gap, that election gap, which was like low 70s, mid 70s. Like, it's not trying to attempting to fill that gap. It's holding pretty steady in the low to mid 90s. That's telling me that the risk barometer for the risk on environment is kind of holding somewhat steady. So I'm not, like, I know it's crazy to say because crypto used to be one of the most risky assets out there, that's showing me that it's holding steady and the risk on environment is still somewhat strong. It's just getting tested right now. So that's giving me the confidence on buying the dip a bit. And Coinbase right now, like Coinbase is a sympathy play for crypto. Like if crypto is going to have that euphoric year, which historically, like this year will be the euphoria of crypto before the bear market occurs in 2026, Coinbase could hit 500. Like things could get crazy for Coinbase because they profit on transaction volume, but really transaction volume is followed by volatility in the crypto markets. So if Bitcoin hits 150, 200, that's going to create a ton of volatility in the on their exchange, and that's also going to, like all coins are going to take off. These meme coins, like it's the whole ecosystem will take off in the euphoric year, and they're going to be printing cash. And Coinbase is a cyclical business, so when things are get in the euphoria phase, they will be benefiting substantially before obviously they're going to struggle during the bear market. But either way, right now, uh, Bitcoin looks like it's holding strong right now at this level. So I'd be encouraged. I really would. There's a lot of ETFs out there that you can capitalize on this. That's not just coin like ConL, the 2x leverage ETF. So I think crypto is showing a lot of strength, like much more than the equity markets, and that's something that's been kind of somewhat of a trend since Q4. Yeah. So as of right now, Jordan's working on his getting back on, but I'm looking at the pre-market action. We're gonna open in 4 minutes. I'm seeing IonQ has broke through $40, so the quantum sell-off is increasing. It's sticky. It's occurring. Like I do think, like I mentioned earlier on the call, crypto. I mean, quantum thematic just had a massive pull forward re-rating. People thought that you might still believe this after Jensen's comments, but people thought that quantum was decades away. Google's Willow academic breakthrough showed that it's really years away, not decades. So they went through a massive re-rating because if you factor all these pure, um, four or five pure quantum names together in a bucket, it's still 25 billion in market cap total. So I think that there is going to be, there's still a lot of room to play. It just I don't, it's just so early. Like if AI, like I make this comment all the time. Like if this was a baseball game, AI is still going through the first round of batting order. Like it's in the second, third inning. If IonQ was in part of that, I mean, if Quantum was part of that same baseball game, it's just stretching before batting practice. It's so early. So like people are anticipating like a $10 billion company to not give up maybe a 50% haircut along their path of just becoming that multi-bagger is delusional. But either way, I do want to call out that there is a cool new feature on StockTwits where you can actually have a full
Practice.
screen live
It's
video
so early.
so like people are anticipating like, oh, there might be
Like
an
a
$10 billion
$10 billion.
company to not give up maybe a 50% haircut along their path of just becoming that multi-bagger is delusional. So that was cool hearing myself talk on that. But anyway, you can watch us live directly in the app and website now on StockTwits. So like again, information is currency now in this next like decade, especially within post AI world. You have to be able to utilize any kind of app, website to get the info, the alpha to make your own decisions. And like I love that StockTwits created this new full screen live video feature. It's like very YouTube esque type thing. It's like kind of the new TV. Like I do believe I don't speak in ego, but like this is kind of the new media right now, where you gotta get a lot of the information rapidly and gotta use resources. So we're gonna open in 2 minutes. I'm looking at Palantir's continuing their pullback as well. They just broke through $68. So Palantir is an interesting one. It's kind of run up just like an IonQ, where even after this pullback from like $84 to now 68, that's a 20% pullback. So it's essentially in a bear market technically. But I I think the level to watch, like 21-week EMA, is a big level for Palantir. Where is that? That's a $58. Like there's still ways to go in the stock. So I think a lot of these quote unquote Q4 winners, like the Palantirs, the IonQs, even the Rocket Labs, like a lot of these like winners of these early secular growth themes, they're struggling a bit in January. There's a little fatigue, and that's kind of what you. It sucks to see, and it's a gut punch, especially since I'm Palantir is still my number one position in my growth portfolio. IonQ is still the number one position in my small cap portfolio. Like there's, I'm overweight on these names, but it's okay for this for me to bleed a little for 20, 30, 40% pullbacks. It's part of the game, and you don't want things to go up to the right constantly. That's how bubbles are formed. And I don't know about you guys. 2021 was a brutal year. 2022 was a brutal year for me. I'm not experiencing a bubble again, but the market is open. Let's see what's happening. Nvidia is definitely catching a bid. It's up 2%. It's at 143. I'm seeing IonQ is pulling back to 22%. Uh, sorry about that. Yeah, let's see. The market is a little red. I think again, like it's waiting for that dip to occur on the 10-year yield for them to take off. Like I'm just watching that 10-year yield right now. And that's TXN if you want to track that. If you want to track that yourself, TXN is it's that arrow TXN. Maybe you can't look it up um on websites, but you can go on CNBC or on the Apple. Just type in TXN, you'll see it. But either way, we're seeing SPY Qs pull back a bit. A lot of red on my screen. I'm trying to see what's green. Snowflake went green. That's very interesting. So I'd love to see that. I think Snowflake, you guys are probably, I'm just talking my book here because I'm a massive Snowflake bull. I think I'm saying 2025 will be the year of software, consumption software stocks are going to freaking take off. Data will be exploding in an agentic AI environment. It's going to, absolutely will. And it's going to cause a massive reacceleration on the top line and a margin expansion opportunity across all these consumption names. Snowflake had a narrative issue all of 2024. Data warehouse company being cannibalized by AI. Last earnings reports showed some light that, that might not be the case. We're seeing a 3% uptick on their ARR based on Gen AI projects. Like they're seeing Gen AI fundamentals flowing through now. And that was the first signs of it. They spent all of last year as an investment year, spending so many dollars on getting as much compute as possible from Nvidia, which is very pricey, in order to create these go-to-market AI products. Sridhar had to play catch-up because Frank Slootman was sleeping at the wheel for years on AI. So he had to play catch-up. And I think now they got enough tools necessary to kind of create these go-to-market AI products. And that's going to create the margin compression story, I think, is behind us now on Snowflake. Now it's going to start reverting back to what it usually is, which is high 76, 77%. So I do think that Snowflake is going to kind of have that narrative change that's going to cause a re-rating on the stock where it's going to start transforming into the AI data platform for enterprises narrative. And they're going to cement themselves as a stage 2 AI winner. And they're going to be in the same ballpark as a Palantir, Tesla, Cloudflare. Like those three names have cemented themselves in this stage 2 AI win, like tech stack where they're going to survive this post AI world. And Snowflake right now is trading at 30 times their free cash flow. Like, I mean, 40 times this year's free cash flow. Those names as called out, Palantir is trading at 120, Cloudflare is trading at 150, 160. The market's willing to assign a premium valuation on companies or software companies that are going to prove that they're going to be a post AI winner and thrive in the post AI world. And they're going to assign a premium valuation to them. So like this re-rating, I think it's going to occur from like a 40 times price to sale, so maybe 100 plus times. And I think that's a nosebleed valuation. But right now the market's showing you they don't care about valuation as much. They just want to see if you're going to survive this cannibalization from AI. And if you do, you're going to have unprecedented pricing power. So like I could care less what the fundamentals are going to be like in the next couple of years because I know there's going to be a 180 on those. Like, there's going to be a 180 on those fundamentals if you survive and thrive because you'll have stupid pricing power. So I think Snowflake's one of those candidates where like, they might be $300+ this year. Like I think there's gonna be a couple software names that are gonna have a Palantir like move. There will be the ones who are just like there's some doubt on them surviving, blah blah blah, competitive headwinds. I think Snowflake's one of those names. There's probably gonna be a couple others. We're really early in the year, but this is going to be the year of software. So I'm very bullish on that space. Palantir looks like it's about to go green. It looks like, yeah, the market's bouncing a bit. So tech is bouncing. SPY is still red. Wow, IonQ is down 25%. So that's bleeding. Let's see what else is out there. Wow, yeah. So everything is down. 28, 35%, 35%. Rigetti's down 36%. Bloody day for quantum. Uh, Name of the game. Volatility is the toll you have to pay to kind of be part of these secular growth themes that you're experiencing today. It's not just up to the right. There's going to be some vicious days out there. And that's fine. There's going to be some buying opportunities in these names. I will say, um, what else is happening? Yeah, I don't know. It's kind of a besides quantum pulling back. I mean, it looks like small caps are not doing well right now. I'm looking at yeah, Nvidia is doing really well. I'm looking at IWM though is not doing well. So I think small caps are kind of getting penalized from the 10-year yield being really high. I think that's probably what's really driving this pullback in small caps. Maybe that's repositioning towards large cap tech because again, 10-year yield doesn't matter that much to large cap tech. They're printing cash. Really, it's small caps get affected because they have to borrow. They have to borrow capital for to fulfill their whatever their visions are on their and their initiatives. Like they aren't profitable companies. They have to use leverage. They have to. I forgot what the statistic is, but like I think 30 to 40% of small cap names use a variable interest rate. So like it's not fixed. Like if the interest rates keep going higher and higher, like they're going to be making less in the bottom line. They're going to be like losing more and more money. So like it is they're highly vulnerable towards the 10-year yield being higher. But it looks like right now large cap tech's not carrying as much. Wow, IonQ is just bleeding. I gotta look at this levels. Maybe there's a bounce spot. It's down 31% now. Wow, everything is down a ton right there. So yeah, I mean, if you missed this quantum boat, this might be the time. I don't know about today, but I'm saying they're kind of getting re-rated a bit after Jensen's comments, which I think it's way overblown. It's more of an observation, but it is what it is. I'm looking at the levels. Yeah, it's still got ways to go though on this pullback. I still think that there are certain names that are going to pull back more, but other than that, let's see what else is happening. Yeah, Q's tech is pulling back again. Yeah, it looks like an ugly day today. Not much is happening. Yeah, so I guess we can end early today. I think we have 20 minutes left, but like I'm gonna wait till some more action happens right now. Uh, Hopefully, my co-star host Jordan's doing fine, but those wins, it's vicious wins. I will say, let's see. Yeah, I could let's see what the market's doing more. Yeah, market's just pulling back a bit more as well. IWM's down 1%. I'm just looking at this ion key. I'm looking at this quantum plays. This is crazy action. It's crazy that one comment from a CEO can cause this type of action, but that's what frothiness causes. Like it is the whole space was pretty frothy. Like it's just years and a way. Like I made that comment that quantum is stretching before batting practice in the ball game of the revolution. So maybe it just needed this like gut check. I'm hoping a lot of people didn't like invest in these companies like recently in the past month because you're definitely feeling the action right now. And I just I want to reiterate, like, it's okay. It's not okay to be down 30, 40% in one day, but um, this is a multi-decade journey for quantum. It's not just like a matter of 1 or 2 years. So um, I want to, like, it's okay to feel this little pain, like no pain, no gain type situation. Just like it's a slow DCA process. That's my advice. Where there's so much runway for the quantum. It's going to take so much time for them to come to fruition. That embrace the volatility. It's the toll you have to pay on trying to have exposure in this revolution, and have enough dry powder to capitalize, and don't over leverage yourself, because that's when things. Yeah, I mean, I will say the comment on I just got a comment. This guy says IonQ is $9 to $10. Fair value is low teens, but you have to ask yourself, like, when was the last time you bought something fair value on something as revolutionary as quantum AI, robotics? Like, that doesn't exist. Like, you can't buy a first mover advantage or leader in these early secular growth themes at a fair value. You just can't. Like, I built an overweight position in Palantir under $10. People were saying fair value was like $3 to $4. Like, they consistently say fair value is 40, 50% of a haircut of whatever it is at that time, because you can't see. My favorite quote ever, I use all the time. I'm probably going to use it on Friday's show at Fox Business when I'm on there. Dan Ives says this comment all the time, and it resonates with me so much. You can't see AI in spreadsheets. You can't see quantum computing in spreadsheets. It's something that's so revolutionary that you can't back it up on fundamentals, and a lot of times you miss the boat. Again, I built an overweight position in IonQ under $7. That wasn't based on fundamentals or a spreadsheet. It was based on my conviction and my research that if quantum becomes a reality, there is only one pure play, in my opinion, to capitalize on that. It's IonQ. So I had a speculative position in it, and then I built an overweight position once they started getting more deal flow from government, Air Force, and then the Google Willow breakthrough just opened the door, floodgate on that whole thing. So I think that's like my like 2 cents on like trying to put a fair value on something in the AI or quantum bucket. Like, you just don't, because you can't see how disruptive it's going to be in your spreadsheets. You just really can't. So that's my take on that. I'm seeing what else is happening. Um, yeah, I mean, it looks like a pretty mellow day. Tesla's green at least. Snowflake is showing some more strength. Let's see what else. Tech looks like it's bouncing back a bit, actually. It's about to go green. Again, I just don't think we're going to do much in this market today. I really don't think so. Like, I think that the 10-year yield is just being a stubborn little freaking crazy ankle weight on the market. Not going to be moving much. Yeah, it's pulling back a bit now. Wow. IonQ is down 40% now. Yeah, so I'm going to figure out what levels to add on this and do some digging, but this is I appreciate you guys holding strong. I know my co-host Jordan, he's experiencing the heavy winds that's affecting his Wi-Fi. I have a feeling that might occur for me sometime today, because I'm in between two fires right now in Beverly Hills, where there's one in the west side, and there's also one in Glendale right now, or Pasadena. So pretty crazy times in LA, but nothing more crazy than just seeing these stocks going up 40% and yeah, in one day for that whole thing, and markets just pulling back. So my two pieces of advice: stay safe out there. Markets close tomorrow to honor President Carter. And Friday, I don't know how much we're gonna see on Friday, but earnings season just around the corner. Just like, don't have enough dry powder to capitalize on some volatility, because I do think this is gonna be a very volatile year, it's gonna be very choppy up and down, and have to try to capitalize on the down. But yeah, thanks everyone for hopping in. We're off tomorrow, and Friday we're gonna return. I'll be back here next week, and stay safe out there, guys.